Good morning, good afternoon, good evening, and welcome to the Thursday, the 20th of April Bull versus Bear webinar with Steve Miley on the call for trade day. Welcome, everyone. Quick apologies for yesterday's webinar not happening. My issue, I had a personal thing that I had to take care of that massively overran. It was a hospital appointment for my son. So, yeah, I don't want to make excuses, but it was significant. So, yeah, my apologies for that didn't happen. And then just for today, to let you guys know as well in here, I'm going to be keeping this relatively brief, about 20 minutes in here, but that'll give us time to cover everything we need to cover in here. So let's kick off with the calendar. We'll take a look at the calendars, what we've had, what we've got coming up. We'll take a look at some articles from the major news wires, what's impacting markets right here, right now, and then take a look at some charts. I'm going to kick off with the calendar, macro calendar. So we had the Bank of Japan this morning. Best conference, no change in rates, but again they were fairly dovish in here, and I'm trying to look for the article in here. Maybe he's got it in 5 things. So the dollar stays king in here. The dollar has been this strong in more than 5 years. As investors can't seem to shake off the appeal of the currency. So it's the strong currency because it's the most hawkish central bank by far. And just looking in here, this article, dollar extends gains as dovish BOJ ripples through FX world. Japanese yen tanks beyond 130 for the first time since 2002. Bank of Japan sticks with easing in contrast to the hawkish Fed. So that's what we got this morning in here. We already knew that they were uber dovish. They're staying uber dovish in the face of inflationary pressures around the globe. Okay, so they're staying super dovish, and the yen is getting crushed on the back of it. Dollar yen surging higher. So that's a significant development in here this morning on the calendar. And then also ECB's the Greener speaks in here. ECB staying relatively dovish as well, and the euro getting crushed. And the dollar is strong across the board, rallying against all of the major currencies in here, and also rallying against emerging markets. So continuing the strength that we've seen, and the dollar stays king because of the hawkishness of the central bank of the Fed in here. What do we have coming up today? We have US GDP data. Remember, GDP though is very, very, very backward looking. Okay, so I don't see this as having a massive impact on the market. We've also got the price index that could have a little bit of an impact. We also usually get PCE today, so I'm not sure why that's not showing there. If I go to just to the where are we? The FX. I don't think I've got it on here. FX Street calendar. I'm sure we also get. So PCE data, actually, let me have a look. If I go back in here, I can look at the CME calendar. I'm pretty sure we get PCE data as well. Was that not loading? Not Friday. Not quite sure why that's not loading. Oh, here we go. It is loaded down here. Where are we? We're at the 28th of April. So end of the month. Oops. Sorry, guys. So yeah, 28th. Here we are. US GDP. So US GDP, actual jobless claims. Yes. Oh no. So it's not showing in here. US PCE data. I know we got PCE definitely tomorrow. But yeah. But then maybe the prices paid part would be the price index in here. But it's backward, quarter on quarter for Q1 preliminary data. So might have an impact, but probably not reading too much into most of that. Going late in the session, we do get the PMI data from China, and that could be interesting given the lockdowns. Okay, so watching out for that. The Casein manufacturing PMI data later today. Yeah, moving on to earnings in here. So I'm looking back first of all. Meta. We had Meta yesterday. Really good data, Facebook in here. So as you see, Meta shares surge after Facebook ekes out user growth. So in post-market and pre-market trading up 20%. And that pulled the whole tech sector up. Not only with Meta rallying there. I'm going to close down some of these. So I know what I've covered in here with you guys. But also we had Qualcomm as well. Okay, so the chip. Where is that? I've got something on that as well. I'm sure we'll come across it shortly as we go through. But Qualcomm in there, look, Qualcomm leads US chip makers high in pre-market trading as well. So tech earnings soothing nerves. Okay, both Meta, having had Twitter and Tesla sell off on the Twitter announcement, the Musk announcement in here. Tesla got damaged on that, and obviously Google early this week was kind of negative, so we saw a big sell-off in Google, pulling everything down yesterday. Really negative close for the Nasdaq next yesterday, down at I think 4%, right, nearly just under 4% we were down yesterday. So big sell-off in here, looked negative, but then good turnaround rebound in here. What was the sell-off? Was that Tuesday? The big sell-off to 4%. Anyway, getting confused in here, but another sell-off yesterday, but then sell-off and a rebound through yesterday, and then Meta going higher in late market. So it's Tuesday we had the big sell-off of 4%, rebounded intraday yesterday, and then we had post-hours rally of Meta and Qualcomm helping the market higher in here. So that's looking back. Okay, that's what we had yesterday. Meta and Qualcomm in here and driving markets higher. Looking into today, we've got Apple and Amazon. Huge. Remember, after the bell, after the market closes in here. So we're certainly watching out for that. That usually comes between 4 and 5 p.m. Eastern time, 9 and 10 p.m. UK time, and then that's just like 3 to 4 in Central time in here. So, but between 4 and 5 after the close, Apple and Amazon usually quite quickly after close, between 4 and 4:30 usually we get those results. So Apple and Amazon, we're certainly watching out for those late in the session today. Intel as well later today. Mastercard might do something, but we're watching all of these. But really, Apple and Amazon are going to be key. Actually, sorry, we've already had a lot of these in here today. So a sea of green in here as well. So positive, beating expectations of what we've had. So yeah, we've already spoken about Meta, and then Caterpillar as well. Actually, so where is Caterpillar? Is that in here? Yeah, Caterpillar's down here. Now, even though it's not Apple's a $2.5 trillion company, and Caterpillar nowhere near as big, but Caterpillar is often seen as a bellwether, a benchmark for the US. A bellwether and benchmark for the US construction industry and the US housing market. Okay, so Caterpillar is doing well. That's usually a green light for the housing market and for the whole construction industry. And if we look in here, at Caterpillar first quarter sales rise 40% on demand for heavy equipment. So that's certainly a positive as well. Showing that the housing market, the building industry is still in good condition in the US in here. Going through the 5 things that started today. So we've always spoken about the dollar being super strong in here. Meta doing well as well, and then there's some confusion at the moment within Europe about European nations and looking for guidance on paying for Russian gas in rubles. US equity futures and European stocks are up. We'll take a look at that shortly. Again, they're talking about US advanced GDP data release, but GDP very backward looking data, so I'm not necessarily sure that's going to have a big impact in here. Biden is speaking later today on support for Ukraine. Don't really see that as being a massive deal, and we've had most of these, a lot of these results already, and the others are coming then after the bell. So you've got Apple and Twitter. I actually missed Twitter, so that's going to be interesting where Twitter comes in. Okay, Dollar King. Dollar extends gains as dovish BOG ripples through FX world, yen through 130. Yeah, we've already spoken about that. And the Bank of Japan still uber dovish. Nasdaq and the other major indices all higher on the tech earnings in here. We've spoken about that. Meta on Qualcomm in here, and US European shares advance as euro dives to lowest. So we've already covered that. Strong dollar and dollar strong across the board. And then quick nod to oil. Oil extends bumpy weak as traders weigh China's demand. So the concerns about demand from China because of the lockdowns in here in China, but bounce back within the range in here. So a choppy oil. We'll take a look at the chart shortly, and Reuters covering that as well. Oil prices fluctuate in the face of supply and demand. So there's a real concern between the fact that we've got the lockdowns in here, meaning less demand, but then also the supply issues around Russia, etc. So European bourses are a sea of green this morning, a bit playing catch up from last night, obviously closing before the US markets closed, and we had a strong close last night, but also on the back of then those tech earnings in here after the US close. That we've already discussed, propelling European markets higher, not aggressively higher, but we're up anywhere between 0.5% and 1.5%, depending on the exchange. And if we look at US bourses in here this morning, in here for some reason, the future's not loading, but we're up, right? So in here, still not loading. That's strange. Okay, not to worry. But if we look at where we are, US futures here, the S&P overnight is about 1.5% up, and Nasdaq's basically 2% up. Dow's about 0.8% up on the futures going into this morning. So yeah, and then the weak currency gain, Reuters going again with that weakness in the currency. And again, from Forex Live, just to touch on the currency, it's a big deal. It's a real headline grabber this morning. So Japan Ministry of Finance officials say recent FX moves are extreme worry, hinting at intervention, but only hinting at intervention in here, and nothing really going on at the moment on that side. And dollar yen up 2% on the day, up through 130. Quick nod to the tool in here, the Fed Watch tool. So pretty much nailed on. We've been talking about for the May meeting. On the June meeting now, this is continuing to rise higher for a 75 basis point rise at the June meeting. So 50 basis points in the first meeting, in the May meeting, and nailing on in here. Remember, look, 25 to 50 is where we are now. This is pricing in 150 to 175. That's up obviously 125. So looking for a much sharper a rate rise at the next two meetings. I'm just kicking off in here. I know I'm a whistle stopping through this, guys, but yeah, a little bit rushed today. But I'm really much covering everything in here. There's the dollar. Boom, 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 up, 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 and away, and continuing surging higher in here today. Whilst we're on this tab, I'm going to have a quick look to the commodities. So gold. First of all, gold lower, weakening, even though we've kind of been a bit more in risk-off scenario. Gold selling off because of the strength in the dollar. Remember, commodities do react to the dollar, and gold is often, there's an inverse correlation between the strength of the dollar and the gold price, right? So otherwise, gold is continuously changing its price in dollars and in all the other, in respect to all the other currencies. So a stronger dollar often sees a sell-off in gold, and we've certainly seen that. But we did get a sell-off and a rebound in here today. So we have had a rebound in gold. Broke down yesterday, down through the low in here from the end of March, and going to its lowest point today, sits all the way back here since the middle of February. But we have had an intraday rebound. So going in now to a 1 hour chart on gold, you could argue like base forming. Okay, but I would say more, this downtrend is very much intact. Just going to get rid of all the drawing tools on here. And then, you look at this trend line in here. And then even the sharper trend line comes through here, you could argue. Whoops, which one's that? Down through here, that one's intact as well. So maybe setting into this more accelerated trend line. This is the one that comes down from 22nd of April through pretty much yesterday. Okay, so maybe setting into that now. Maybe that's enough for this correction. And then what I would do in here is I would step in just to show you a bit of analysis, how I would look at this now. And if you want to sell into this, waiting for this to roll, and as it rolls, sell into the roll. So as it breaks back down through support. So then you're looking at this. We're kind of flirting with this trend line, maybe back down through this low here. So this low's 1886.3. Maybe that should trigger to then go into the short. Let's take a look at oil on the daily first of all. So it's kind of sideways the last couple of days, kind of right in the middle of that range. You can see in here, if I've got this in here, you can see this range here. I'm going to take off this Fibbo. Okay, but if you look at this Fibonacci here, from here, this range here that we established in the latter part of March, there's the 50% retracement of that range. Okay, so we're bang on, just sitting right on that 50% retracement. Where we go from here, we're going to a 1 hour chart, kind of choppy and sideways. Downtrend was reversed sideways in here. No strong view. Hold a gun to my head. I'm short. We failed 1, 2, 3 times in here. Failed at this kind of area around 103, really just below 103, around 103. I prefer to be short, but maybe looking for a breakdown here. So hold a gun to my head. I'm probably short in here going into today, but we'll probably prefer not to trade that one. Let's go to the indices in here. Quick nod to the bond market first of all. So bonds seem to have established a base. We did sell off yesterday, but rebounding this morning. So pushing to higher prices, lower yields. That should be supportive of stocks. Let's go and take a look at, first of all, the S&P. So we're still inside. So it was 2 days ago. It was Tuesday. We saw the big sell-off in here, which was basically almost a 4% on NASDAQ. The S&P held these lows in here, these lows from the beginning of March. Rebounded inside pattern, rebounded still inside that big sell-off day, but nevertheless getting back, quite a lot of the sell-off. And if we step into like the 1 hour chart on the S&P, there's the big sell-off in here from the last few days, from the back end of last week, beginning of last week. The back end of last week, from the back end of last week. We reversed this trend line here. I think you can only be long in here now. As much as you got the bigger bear outlook. I think going into today, you got another little swing low. I think probably buy opportunity right in here, right now, looking for that next swing higher. And again, probably stepping in. If I look at what we've got back. 1 second. So I'm going to stay with this. Where are we? 1 hour. If we look at what we've got back from Fibonacci perspective, from this 1 week sell-off, there's the sell-off in here. We're kind of came up towards the 38.2%. Okay, it's got it around the wrong way because of the way it does it on here, but that's basically the 38.2% retracement. We're not quite there yet. Okay, we're certainly on the more impulsive move. This was like Thursday's sell-off. Let me see if it will let me to drag it here. So in here, from just the Tuesday sell, in here, we're basically up through the 38.250 and the 61.8%. So you've neutralized that sell-off in here. So I think that's a positive. And I would then step in, where you're going to buy it. Well, I'll go into like 15-minute chart. There's the uptrend. Here's the uptrend line. You've got this kind of shallow one through here. Doesn't really work for us, but then the more accelerated one here. And you can see, look, right now we're impulsively moving away again. Okay, and then even a more accelerated one up through here. Look, coming right off that one. Boom. Yeah, I think I'd be putting the trigger on this right now to be long. Okay, you've held that support trend line, looking for the next break up through here. So yeah, and then you got this impulsive bar. This is on the 15-minute candle. So this bar actually only just started this bar. So yeah, I'd be jumping on this one now to be in long. Daily on the Nasdaq. Nasdaq did eclipse. We did go below the low to the new low for the year. Okay. Down through this mid-March low back on Tuesday. Again, rebounding still inside the big Tuesday sell-off range, but pushing back. You've kind of neutralized that sell-off. So if we, again, just put the Fibo on for the sell-off, just Tuesday's move, right? In here, you can see we're already through the 61.8%. So you've neutralized Tuesday's sell-off already, and you've neutralized, if you think of that as a Marabuzo, then through the 50% neutralizes, we're through the 61.8. So all risk for me in here to the upside. If I step in now on the NASDAQ, I've got it at the moment on a 5-minute, but let's step out first of all to a 1 hour. So going to get rid of all these old drawing tools. And so there's the 1 week sell-off in here. That's from the 21st, right? Yeah, from the 21st, there's the 1 week sell-off. If we look at the trend line on that from the 1 week sell-off, NASDAQ's actually through that, okay? And if we look at the whole sell-off, the fib, for the whole sell-off, here through to the 1 week sell-off in here, you can see we're all quite close to 38.2. 38.2 comes in around 13,365. Okay, so yeah, getting quite close to that. And look again, the little swing back lower. And if I zoom in now, go into like a 15-minute on the actual rally, the rebound rally, and do some analysis on where we are now in this recovery. Again, this lower line doesn't really help us, this shallower line, but it does hold. You get almost a second touch. So then that makes this point here significant. Okay, makes this low. You'll draw off of here, that makes this low here significant. And if then we go and draw then from this new low that we deemed as significant, so you flirted with that there, and then rejecting. Look, this candlestick really impulsive, and that's just in the last 5 minutes, right? If you go to the 5-minute chart. Actually, no. So we're just flipping, yeah. So that's. I would say this is a really, I'd be putting the trigger to go long right now, guys. Boom. Yeah, it looks bullish to me. I do think we're going to get a decent recovery in here today. On the back of that Meta, on the Qualcomm, on the Caterpillar, and the fact that bonds have got a base in now, all of that pointing me higher in here. So yeah, looking for upside further today. Right. That was a bit of a whistle stop. Got it all in 21 minutes. I'm going to wish you all a great trading day. Stay safe out there. I'll be back with you another Bull versus Bear webinar on Friday, TGI Friday. Until then, yeah,